Hey everybody, welcome back. Today I've got a special interview lined up with a market analyst, and we're diving into the impact of tariffs, the outlook for the 2025 stock market, and how to trade smart through it all. We'll break down how the current environment echoes the past. Think back to 2008, and how we can use that to position ourselves today. We'll also touch on some small caps and big-name stocks that might be worth watching. So let's get into it.
Thanks for having me. With the 2025 market shaping up like it is, there's a lot of volatility. Some of it is driven by uncertainty over tariffs, inflation, and global tensions. But there's also opportunity if you know where to look and how to pace your moves.
Let's start with those tariffs. How are they hitting different sectors right now, like tech, healthcare, and energy?
Tariffs are definitely putting pressure on manufacturing and shipping, but software and services are somewhat insulated. For example, companies like C3.ai, which focus on enterprise AI solutions, aren't as exposed to supply chain disruptions. Maritime, shipping. Companies, on the other hand, especially ones tied to global oil movement like HMR Maritime, might actually benefit as shipping rates adjust. Healthcare sees some indirect effects, higher costs for imported equipment or ingredients, but it's more stable overall compared to sectors like retail or tech hardware.
Interesting. And what does that mean for investors looking at small caps versus large caps?
Right now, the smart move is to use volatility to your advantage. Start with small caps that have potential upside and room to grow. Then, as the market stabilizes or trends turn around, shift into large caps for more consistency and safety. Small cap AI plays like SoundHound, Big Bear, and quantum computing have momentum. Once you've gained on those, you could pivot into companies like Meta, Microsoft, Google, or NVDA, names with infrastructure and staying power.
What kind of time frames are you watching when trading this market?
I always start with the weekly chart to get the macro view. Trends, support and resistance, overall strength. Then I'll drop into the daily for entries and momentum. The monthly chart helps confirm the bigger cycle picture. And during periods of high volatility like now, the shorter time frames like the hourly can show you where institutional buyers or sellers might be stepping in.
What kind of setup would you use if you had, say, $5,000 to trade with?
I'd split it strategically. Maybe go heavier into names like Big Bear and SoundHound early on. They're still relatively cheap, and if they pop, that gives you capital to work with. I'd keep an eye on SMCI too, because of how it's tied to AI infrastructure. Once you get some gains, roll that into more stable names like Palantir, NVIDIA, or Microsoft. Palantir in particular has long-term government and military contracts that make it resilient even with global instability.
And what about a stock like HMR Maritime?
HMR Maritime is interesting because global shipping could see a resurgence. If tariffs are applied and trade routes shift, companies managing fleets with flexibility and international exposure can benefit. It's a niche play, but in a turbulent market, that's sometimes where the opportunities hide.
You also mentioned using history, like 2008, as a guide. How does that tie into your strategy?
Yeah, 2008 taught us a lot. The biggest gains came not from chasing the dip, but from waiting for real strength to return. That's why those weekly and monthly charts matter so much. If you can identify where institutions are accumulating, even in chaos, that's your edge. We're not in full-blown crash mode right now, but there's a chance we could see sharp pullbacks. That's why you want to be both defensive and opportunistic.
So if someone's just starting out, what would you suggest?
Keep it simple. Follow the money. Look at volume spikes, trend reversals, and sectors showing relative strength. Use risk management. And don't be afraid to rotate out of plays that run up. Take profits, protect capital, and be patient. That way, whether you're in something like quantum computing or a giant like Meta, you're not stuck holding the bag.
That's solid advice. Thanks so much for coming on and breaking all of that down.
Absolutely. Thanks for having me. There's a lot of noise out there right now, but with a smart strategy and the right names, you can definitely stay ahead of the curve.
If you enjoyed this video, don't forget to like and subscribe for more insights and strategies.